Hi there, welcome to our investment explainer for our February 2026 income investment fixed coupon note on the ASX Blue Chip stocks HUB24, Xero and JB Hi-Fi. This thing's yielding 12.23%. It'll pay quarterly in cash to your bank account. The rate is subject to change. It can drop or rise anywhere up to sort of 0.5% overall. This investment is for sophisticated or S708 and wholesale investors only. So stock selection, as we saw, JB Hi-Fi, Hub, and Xero recently have had some fairly significant falls. But if you look under the hood, we use two very consistent scoring metrics here for our stock selection with all of our fixed coupons. They have to meet a certain, a minimum requirement. So the Altman Z score is a financial health and bankruptcy risk, and the Piotrowski score is the strength of the company's financial position. So we don't take anything below a 4 on the Piotrowski. And as you can see here, we've got JB Hi-Fi with the 6, Hub with the 7, Xero with the 5. Altman Z score, we really don't consider anything below a 6. And all of these comfortably make the grade here at 7.8, 13.3, and 9. So it's comfortably here in the high quality, very low risk range. Overall financial health is classified as good for all of them. What could spoil the party? Well, look, whilst we're at rich multiples, Xero's come back from 190 back to around about 85. JB Hi-Fi's come back from a very rich valuation as well, but making them quite cheap. And same with HUB24. They've got strong cash generation, prudent leverage. These firms don't really look remotely like candidates for a 40% meltdown. They've generally got financial discipline across the board, and at these current levels, very good candidates for fixed coupon notes. Because our major concern with fixed coupon notes is that they drop below the 40% barrier. Firstly, here we've got HUB24, structural earning resilience through its platform, the revenue model, which just literally takes and benefits from the inflow of super, which keeps increasing from government, from government regulation. I would dare say the platform will benefit even more so now that super will have to be paid on a monthly basis, not a quarterly basis, and the government's tightening up regulation around that as well. It's all recurring revenue realistically for funds under management administration, and there's sustained net inflows. We've got recurring revenue base, net cash balance sheet. And when we've had drawdowns before, but not of any significance. Realistically, for the last 10 years, this has just been a very consistent grind higher. We're currently around that $85 mark. We would have to breach the April lows from last year, which it did bounce out of significantly quickly, and went on to make a high around the 120 mark, and probably fallen away about 25% from there. So wherever the strike day is, the barrier will be 40% lower. So it's around circa $51.20, which, look, it is visited once in April last year since it broke up there in 2024. And as you can see, very consistent chart. JB Hi-Fi, very much regarded as one of the best retailers in the world, used to hold the mantle as the highest revenue per square feet of any retailer in the world. It was extraordinarily pricey around that 120 mark. We've since fallen back down to 80, which means that we've had a 33% plus drop already. The likelihood of it having a further 40% drop is highly, highly unlikely. Since we busted up here in 2024, it's really gone gangbusters, but it would have to get back to prices that it made, essentially coming out of COVID. So, its balance sheet strength is incredible. Its operating leverage and control, variable cost structures, disciplined inventory management. They've just been proven performers time and time again, and they're high on the cash generation front with dividends. Even with a softening consumer, I really don't see this going back to levels around 2024, particularly over a 2-year period. And this is probably not a bad opportunity to be putting on the fixed coupon here at the moment. Xero is another one here, and look, this has been extremely volatile. It's a growth. It is a growth stock. It does maintain a very disciplined approach with the rule of 40. Its gross margins are near 90%. It's it has really sticky subscription base. There is talk of threats from AI, but I would rebuff that by saying that you cannot really replicate and get all these connections for all of these banking institutions, and all of your accounting, etc., which is all very confidential information, just built by an AI. It is categorically not going to happen. And this is where software, this sort of specific and specialized software will still have a moat. But however, we have dropped from $195 to $83. There's the chance, I would imagine, of it dropping a further 40% from here below $50 would bring it back to prices that it was at in 2018, which I think is highly unlikely. They've just made an acquisition. There was already some bad news priced in, but realistically, that the chance of it dropping back below 50 would mean that someone has managed to, bring out a fairly impossible piece of software via AI. I think the market is, as it stands at the moment, is the market is pricing in way too much risk to the downside for software companies, similar to what they did with GLP-1 drugs and the likes of CSL and ResMed back in 2023, 24. And I think quality will rise to the top in the long run. So we're taking advantage here of three really good companies which have had, traditionally been market darlings and always ground higher. They've all pulled back significantly, add a 40% barrier to that again, and that really does reduce that risk of ever breaching the barrier. Bullish neutral scenario, you're going to get 12.23% per annum paid quarterly over the next 24 months. If it does drop below, it is a memory Phoenix coupon, so you will not get paid for that quarter particularly, but as it comes back above the barrier, you will get paid all of the coupons in arrears and the coupon that you're due. Bearish scenario is that the stocks end up below the 40% barrier after 24 months. You would then receive the stock down 41%, so $59,000 worth of stock, say for instance, and 59,000, but then obviously plus your 23,000 in your coupons. So you'll have to excuse that. That is not 36 months. That's supposed to be 24 months there. But look, you're only really over a 2-year basis risking 8% per annum. But the likelihood is when striking at in these quality companies that you will more than likely be getting the 24.5 over the course of the next couple of years. So these, this is where we get a little bit of extra yield in these fixed coupons when we've done these deals traditionally. We've done similar things here where we've been getting 13, sometimes up to 14% in some of these runs in the fixed coupon notes, and we've done about 16 to 18 of these, averaging about 12.24% per annum. And we've had a couple mature and roll off recently. But we've maintained a very disciplined approach to this, and a very firm stock selection, policy. So essentially, nothing that's that under any financial stress basically makes it into the baskets, and we largely stick to those stocks which is very opportunistic entry prices. We've only had one stock breach the barrier in the last couple of years. And that fixed coupon has still got over 12 months to go. But that is out of 16 odd baskets of 3 to 4 stocks. Frequently asked questions: how liquid are they? As long as the prices aren't anywhere near the barrier, you'll get very reasonable prices and daily liquidity. And then we've already gone through if the downside barrier is breached, the yield will not change. It can't be improved. It can't decrease either. You can invest through an SMSF. There are no franking credits involved. And in terms of fees, we are paid by the OTC provider, which is one of the major AA rated plus banks in the world. They're our counterparty. They pay us, not you. So what you see is what you get in your pocket. No management fees, no transaction fees, no additional commissions. These are not, unfortunately, available to retail investors. You must be wholesale qualified. So if you just scan this and go to the registration page and to register, or you can contact myself or Kai, and the email address is there. You can call us on 1300 763 869, or you can email us at invest@mpcmarkets.com.au, and Finjudel will get back to you and have a chat. Thanks for listening, and hope to see you investing in these fixed coupons soon.